welcome everyone in the room. Welcome, dear panelists. Well, the weather is great, food is good, so people apparently have a lot to chat outside, but we are glad that you guys are here in the audience. I'm even more glad that I have a great panel with me. We had some chats now, and we had a really interesting briefing a week ago. So looking forward on sustainable thematic investing, which at least 2-3 months ago I would have said, topic du jour, that's the thing you have to invest today better than tomorrow. But we were just chatting now, we both have 2 decades in sustainable thematic investing. We've seen a few cycles, so this is just the normal way of investing. It can't go up all the time. So today, how are we structuring this discussion? Brief intro, and then we kick it right off. What it means to each individual, to each organization, sustainable thematic investing. We touch on a few topics, and in the end, I try to manage time well, that we can also hopefully answer some questions from you. So I'll do the very, very brief intro. So Ariane Dehn, BNP country manager here in Switzerland. Aanand joining us from LGIM, Legal and General Investment Management, head of ETF. Then we have Johannes from Nordea, head of product management. And then we have Richard from Janus, Henderson, managing the Global Technology Fund. So really interesting, diverse panel from skill set, background. Myself, my name is Pierin Menzli. I'm the head of Thematic Equities at Menzli, Safra, Sarasin here in Zurich. Well, let's kick it off. Really, I guess, ladies first. What does sustainable thematic investing mean for your organization? And how do you position it?
No, thank you very much for giving the word. So I think for us as BNP Paribas, to start with, it's a very important area, and maybe reflecting that importance, to give you some numbers, is at the moment we are the biggest sustainable thematic asset manager in Europe. Of course, in a close competition with Pictet, but it's a, I would say, head-to-head race here. But at the moment, we have about 40 billion in sustainable thematic investing with 22 strategies. And I think what is also worth to mention here is that we haven't started sustainable investing not just the last 5 years. This is something we started already 20 years ago. And also some numbers to you in terms of ESG labeled funds that are a very important area in our home markets in France and in Belgium. We are the number 2 in terms of ESG labeled funds in France and the number 1 in Belgium. You know, maybe labels you have heard of. In France is ISR, and in Belgium it's a Fablefin.
Thank you, Ariane. Aanand, maybe different firm, different business.
Absolutely. Thanks for the introduction, and good to see you all. Good afternoon, everyone. So for us, I'm just going to try and answer his question in 2 parts. Sustainable themes, as in what we mean by themes and what we mean by sustainable themes, right? So for us, when we talk about thematic investment, for us, these are areas that's bring about a foundational change to the way we do things, way we live, way we work, way we consume power, the way we manage power, and so on. So when it comes to sustainable themes, predominantly it's kind of bucketed into, say, energy and resources. So clean energy, hydrogen, battery value chain, name it, water, ocean, and things like that. And when you look at each of those, right, we're not trying to provide you with access to names that are found in a typical traditional benchmark, because we see, and of course I'm sure all my panelists here would agree that when it comes to thematic investing, you're looking at the future, companies who are shaping or who will enable the future to be shaped in a better manner. for instance, if you take solar as an example, sun is shining today, you can produce a lot of power in a day like this, but who's actually making the polycrystallines and monocrystallines, biphase panels, who's innovating there, who's making better inverters, who's supplying wind turbines or the rotor blades to wind turbine manufacturers and things like that. So these are the companies who are innovating, pushing the boundaries, bringing about a new technological revolution so that we can do things differently. And when they kind of help us achieve economies of scale, that's when the market kicks off, the growth happens, and we would want to kind of gain access to those. And for us, that is what we mean by a theme. Growth areas that are set to become a sector in the future. Now, when it comes to sustainable themes, of course, when you look at the overall technology bucket, you can argue whether some of these are sustainable or not. If you take cybersecurity, for instance, helps us protect our data, helps us secure our countries and societies, but people generally don't think about that as a sustainable theme as you would think about clean energy, decarbonization, and things like that. So you can kind of debate around that. So sustainable themes, to cut it short again, to summarize and brief for us, high growth areas that are shaping our day-to-day lives and the way we manage energy and resources with a decarbonization angle or with a cleaner technology angle.
Thanks, Aanand, for this intro. So how would you scope it, Johannes? What's sustainable thematic investing at Nordea?
I think for us it's pretty easy. We are an Nordic asset manager. I think people simply expect from us that we are sustainable. So that's where sustainability was born, you can say. So we are doing it since 1988, and we would just not make business if we were not sustainable. So I think we have a good reputation as a thematic investor, but also as a sustainable thematic investor. And that's why perhaps we made life a bit easier for ourselves, and we said, okay, thematic investing for us means that we are investing aligned with the Sustainable Development Goals, which were set by the United Nations. So, which simplifies the life a lot when it comes to, for example, reporting on our success and defining clear goals. So, I think thematic investing goes a lot with being transparent and being fair towards clients, and reporting is a big part of that. So, most of our thematic funds, by definition, they are, when you look at SFDR, which is not a Swiss one, but a European regulation, it is Article 9. They are Article 9 managed, and we manage the biggest thematic Article 9 fund as of today with our Climate and Environment Fund. So that's in brief what Nordea, how we see sustainable thematic investing.
Thanks. Richard?
Finally, but not least, I mean, Janus Henderson has run one of the longest-standing sustainable equity funds out there. So going back to the 1980s, the same for my Global Tech Leaders Fund, going back to the 1980s. So a very long pedigree of investing in thematic, investing in sustainability. But I suppose what I really like about our firm is we don't try and have a top-down construct around sustainability. Because I don't think that works for you as clients, because sustainability means so many different things to all of you. And also, they don't force me into a box of this is what sustainability means for the firm. So as a fund manager, you're forced to go and do that. So I'm allowed to manage my Article 9 fund in a very different way, with many similarities, but with differences too to how Hamish Chamberlain runs his Global Sustainable Equity Fund. So for me as a long-term tech investor and thematic investor, technology for me is the science of solving problems. And so given the challenges we're all facing, there is no way we're going to meet any of these climate pledges or solve many of the social issues we have in the world without technology providing the innovation, the exponential leaps to deliver that. We can do that in a low-carbon way. We can do that, well, navigating the hype cycle, which is what we were talking before. Valuations matter. You can't just buy a bunch of innovation stocks over here that are unprofitable, which, as we've seen over the last year, are down 70%. So we think being technology specialists, doing bottom-up fundamental research is key to sustainability. It's such a complex topic. You really do need experts in sectors to really understand how sustainability works within those sectors for those stocks.
Well, you touched upon, maybe let's go the other way around now, starting with Richard. I mean, the investment engine you touched upon, I mean, how do you do the research? How do you take the investment decision specific to your fund?
Well, the easy thing is what we don't believe in. So we don't believe in ESG overlays. We don't believe in centralized anything. We want to be bottom-up sector specialists. And the beauty for us, and we know how problematic the data is, how bad the third parties are, hopefully no representatives here, about, they basically do no qualitative research, no fundamental analysis of any of these companies, and yet we blindly rely on their numbers and ratings. Now, being sector specialists, I've got an entire team that all they do is analyze companies bottom up. They can do all of the work themselves. We did, for our portfolio, 55 companies, 17 of them were wrong in MSCI in terms of actually having science-based targets, a really basic sort of data point that actually you think could be a simple yes or no. But we know, because we study these companies and research these companies. So we do the research ourselves on the team. We do proprietary revenue mapping for our sustainable themes. We do all of the engagement ourselves. Again, I don't understand any fund manager who outsources engagement about key sustainability topics. And we get access to the top management one-on-one. I had a CFO of Apple one-on-one meeting in February where you can really push them on what they're doing in their supply chain, what they're doing with app takedowns in China. That's what you can do as a bottom-up investor, and that's why I think sustainability is tailor-made for bottom-up fundamental research. So we do everything on the team. It's very much integrated into everything we do in the investment process.
So you don't have any decentralized team doing ESG or doing engagement, doing tech research, and finally the big PM takes then the decision.
So like all asset managers, we have a wonderful centralized new ESG pillar team. But again, the thing I like about my firm is they don't make me use it, because as a tech specialist, it doesn't really make much sense for me. So we do everything ourselves. But I'm given that choice, and that's what I really like, that independence in my firm.
Johannes, what's the secret sauce of your investment approach? How do you do things? How do you differentiate?
I think we do a combination of both things, right? Of course, we have a fundamental bottom-up analysis. I think that's kind of common. You can say it. You need this for thematic investing. You need this expertise. But then we have a 25 people strong responsible investment team who are also analyzing the company from an ESG perspective. And for us, that's just important. Not just to mitigate the risk. It is a risk management tool, a powerful one, but also, and that's what people sometimes are neglecting, it also creates opportunities, right? So it can be a powerful tool also to achieve alpha in the mid to long term. So this ESG analysis is, at least I would say, equally important to the fundamental analysis. And what we do in the end, we need to invest into companies that, if we have a sustainable goal, which we have in our thematic funds, then we need to assure that the company spends their time, spends their revenue, spends their capex in this kind of area. So we like to see companies in our portfolio that are that have the majority of their revenue linked to a certain SDG, which we see in a company. And that's for us then a powerful tool to also monitor if the company is fulfilling to that, and if they really are into SDG and sustainability as much as we are as investor for them. At
BNP, how do you think? What's your investment engine?
Yeah, thank you very much. I think we have our 6-pillar philosophy in terms of sustainability. And to start with, as I said, we have a broad range of ESG-labeled funds in France and in Belgium, and therefore we started already very early to build up our own sustainable center. At the moment, we have 27 specialists only on the sustainable center, and the 6 pillars are from our side. First of all, ESG integration, then sustainable thematic investing, then the area of stewardship and engagement, responsible business, conduct, policy, and last but not least, our own corporate social responsibility. One of our philosophies is really walk the talk. So what means this is nothing where you say, we have already reached a certain standard and now we can stand still. No. Yeah. So we really are here, we see ourselves as a future taker, future maker, then a future taker. So in reality, how it goes. So what we're having, and this is very interesting what you said, Richard, because you don't want to be constrained by somebody sitting in the Sustainable Center to tell you how to manage your portfolio. So therefore, we have here an approach, we have ESG integration in all strategies. But of course, still the fund manager want to have a certain degree of freedom and he want to have a say, what stocks he want to invest in. So what we have done is at each of our portfolio management teams, we have a dedicated ESG champion, and he is working with our Sustainable Center. And here we have the dedicated research specialist for each of the sectors, and we have a database, an own proprietary database of 13,000 companies where we have collected data. And here, if the fund manager want to invest in a certain stock, we have the ESG data available. And if they, let's say, there's a bit of a disagreement, just to take it, that we say, okay, this company has maybe a bit of certain weaknesses in certain areas, we believe in engagement. I think this is very important. So if the portfolio manager is saying, I want to invest in the stock because I believe in the growth potential of this company, and we say there are certain areas where we see, then please engage. You as a portfolio manager, you believe in the company, so you have the obligation to engage with them, to let them know where they have a certain weakness, and maybe we can work on it. And then with a time frame of 18 to 24 months, we will see if the company is reacting. If they're not reacting, then they're forced to divest. So to take an example of a tech company, for example, we are not invested in Facebook. Just to have a practice example.
Thanks. Aanand, in particular, I mean, you mentioned before you have 10 plus thematic ETFs. I mean, how do you come up with a theme? That's probably one of the first steps. And then, how do you fill that theme with hopefully good investments?
Yeah, great question there, and great insights as well from all of you. So for us, just to sort of clarify at the outset, although we are an ETF issuer, our ETFs are not passive. So the bottom line is you cannot do thematic ETFs in a pure passive manner. So what do we do? In my view, we've been the pioneer of thematic ETFs over the last 8 years with first to market in Europe, be it with robotics and automation, cybersecurity, hydrogen, battery value chain, and e-commerce logistics. We've been the first issuer to come up with an ETF in Europe over the last 8 years. Now, how do we do that? In my view, we combine the best of both worlds. We bring in active research, we combine that with actively designed investment strategies to offer you a transparent, highly disciplined selection process in the form of an index. So it's not something where we just pick it off the shelf, have a passive tracker that the ETF just invests into, but it is something that we actively design here at Legal & General within our team, by leveraging data sets that are researched in a bottom-up manner by independent third-party experts. On average, these experts we work with have about 25 analysts sitting with them. So, and you multiply that by 11, so we kind of get the, I would say the work done by about 250, 270 analysts across 11 different teams who are just purely looking at it from a bottom-up perspective. And in fact, at least for about 30 to 40% of our baskets, we do not have any sell-side analyst coverage, right? So banks do not cover those stocks, and hence we go with experts, take their proprietary bottom-up research data, build that into a fully transparent investment strategy that's tracked by our ETFs. Now, how do we identify themes? We look for 5 key factors. When you leave this room, remember the word theme. T for total addressable market. We want the market to be sizable. H for higher growth rate. If a theme is growing at 2 or 3%, we would rather not do it. If it's growing at, say, 10% plus, then that becomes exciting. The most important thing for us is economic rational. Why are consumers adopting? Why are users buying? When we were ordering things from home over the last 2 years, who is delivering that? Who's fulfilling that? Who's the technology company optimizing the route for delivery vehicles. So in the US, for instance, you have companies ensuring that the route taken by the delivery vehicles are getting more right turns so that you don't have to stop at signals. Who are those companies who are innovating, bringing up that solution? So that's the economic rationale. And then when it comes to the M, it's the market cap. Is there investable universe that we can invest into? And finally, one of the most important things for us is we do not build a thematic fund without the availability of experts. So we always partner with dedicated experts who provide that. And just one final note on active engagement. We manage about $7.5 billion in thematic ETFs. But the good thing about working in a firm like Legal & General, we manage about $1.9 trillion across a number of funds. So we just aggregate our positions at a firm level, and our investment stewardship team has a very transparent climate policy. We just set out the way we will vote, and the voting and the engagement does not depend on which manager is managing what or which fund is holding what. So we accumulate all our positions at $1.9 trillion, and we engage with companies that way so that we are able to make a very bring about a significant change by accumulating the assets. And our policies are very transparent, and we've been consistently being ranked by many third-party agencies as one of the best active engagement houses on this planet as it stands today. So I'll stop there, and then I'm conscious that you haven't actually had a chance to provide your views, so maybe you would want to share something.
I'm just a time manager, hopefully asking some semi-intelligent questions to you guys. There's enough intelligence here around the table. I will spare you. With our sustainable thematic approach, it's really not my role as a moderator. So don't worry about that. We have great distribution people running around very diligently and catching potential clients. Hi, Bernard. So we learned how the specific firms are positioned, what they do in terms of sustainable thematic investing, and how they do it. But I would say it sounds all great, different approaches, but in the end, the clients, how should they assess whether they really get what they want? How should they measure the success of sustainable thematic investments? As myself, I'm managing as well a portfolio. I'm responsible for several portfolios, so it's probably the daily question: have you done a good job today? Have you done a good job last month, last year, last 3 years? How are you measured, and how do you deliver the value to your clients to meet their expectations?
I think we've got to be pretty clear that there is no universal, methodology for that, and all clients' expectations of what they want are different. I think what we have to do is just be very clear as to what we're going to deliver, what our process is. And so, from that point of view, we have an Article 9 fund and an Article 8 fund. Now, Article 9, as you say, dual mandate, sustainable objective. How do we define that we're delivering on that sustainable objective? Well, we have 8 sustainable technology themes, which we think are having a positive impact on both the environmental and the social side. And we think that social sides are going to become increasingly important, technologies that are providing solutions to those problems. So we don't just believe in excluding the problems. We want to invest in the solutions too. And on the environmental side, there's some fairly obvious data points. There's some issues still with Scope 1 to 3 methodologies and some of the the ways that the third parties look at it. But there's some fairly well-established metrics that we can show there. Our portfolio is over 70% lower carbon footprint than MSCI ACWI. But then it's the social side that's a lot more challenging, and I think the EU taxonomy is currently wrestling with that. Personally, I might be a bit controversial here, I don't believe the SDGs were created from an investment framework. So we don't like to do that. We don't think that most of the third-party research at the moment is how companies do things. I'm interested in what the company's doing. That's why I look at revenue, because that's the company's product or service. That's what they're being paid for. And so that's why we do our proprietary revenue mapping to say, are we mapping to these themes that are clearly having that positive impact? Are we realistically looking at these companies that don't just have 3% that are doing this? So an example would be, I want to invest in a company that's providing a technology solution, an ed tech company that's democratizing access to education. I'm not interested in a company that has a nice, flashy corporate sustainability report, 200 pages, tick UN SDG 4 because they give €1 million to the local university. Nice, but that's not what I'm interested in. That's not what gets me out of bed. And then we want to provide metrics around that. So, a company like Chegg, they show you their subscribers that, a third of them are first-generation college students. No one in their family's ever gone to university before. A third of them are minorities. A third of them are from families with lower than $25,000 of income. You can see from those subscriber base that this truly is providing a technology solution to a less affluent demographic that's been less likely to go to tertiary education, and it's having a positive impact on that ability to get through university and ultimately get a better job. Those are the sort of data points we're looking for, because that's where we are in on the social side, I think, in terms of tracking positive impact today.
That covers in depth really the Article 9 targets, how you're measured, what you report basically. That's definitely an important part of your investors, I suppose, but obviously they want to get financial returns as well. Just briefly, I mean, what's your reference point? When have you done a good job?
Exactly, and we looked around for a benchmark that we've had some conviction and confidence in the methodology, or we felt really integrated that dual mandate, and we just couldn't find one. If anyone has any suggestions, please do come to me afterwards. Hopefully in time that there will be one. I mean, effectively what an MSCI does is it chops out the bottom half of the ESG laggards in each sector and creates the same geographic and sector exposure. That doesn't work for me, and that's why you've seen so many ESG funds having exposure to Russia, to oil, to tobacco companies. So we don't believe in that. Now, what we do think you can do by investing, particularly on the technology side, I'm obviously a little bit biased, is you can have your cake and eat it. By providing these solutions, you're naturally accessing some of the largest growth markets out there, and actually on the right side of government regulation rather than most of the big tech companies I'm usually investing in. So you can have both that long-term capital appreciation and that sustainable objective. At the moment, we can't really show sort of a relative financial return that really integrates that dual mandate of having that sustainable objective as well as the financial returns. So until that exists, we're just going to have to show, are you happy with the financial returns that we've provided with you long term? Are we doing a good job that satisfies what you need in your portfolio for your clients? And then are we delivering the sustainable objective as well?
Thanks. Johannes, how do you measure success and client values in your offering on the financial and probably as well on the impact/sustainable side?
I think on the financial side we have it a bit easier here because we manage quite diversified thematic portfolios. So we invest quite broadly still in many sectors. You can say we don't have a pure tech fund, a pure water fund or something like that. So we measure ourselves very officially against a general benchmark because we truly believe in that we can, with thematic investment, also outperform the general market. And of course, it also destroys a bit the excuse of many investors who don't know where to put their thematic investments. So we say easily just put into a global equity exposure, for example, and we believe that we can add value to that one still, and we can diversify it. So that's what we are doing on the financial side. And another side is, of course, for most of the thematics, like there's an ecology sector, for example, in Morningstar, right? So you can always have a Morningstar peer group where you officially just manage it or weight it versus your most important peers. So that's a very fair point of evaluating how you're doing financially. Non-financially, I think we are, as I said, most of our funds are Article 9. So when they buy into a Nordea fund, a sustainable thematic Nordea fund, I think it is about creating a lasting impact. It is about delivering on social, on environmental goals, and that's for some quite tricky to measure, especially on the social side, as Richard said. So I think we really believe in this power of engagement, right? If there is still not much social data out there, then we need to somehow force the companies via engagement to provide us with social data. Chegg is a good example, for example. So there is quite some data out there, and for those where we still have gaps, I think it is the power of engaging. So we engage quite a lot. We did more than 1,000 engagements in 2021 with Nordea, collaborative and individual engagements, both combined. And I think in the end, it is about what I said before. It is all about being transparent so that the client knows what to buy and that we can report on what they bought and that it's really a match in the end, right? If it's not a match, then they need to go to another asset manager. That's a fair point as well. There were a lot of thematic investments out there, but if they really want to create lasting impact, if they want to focus on engagement rather than exclusion, I think we are a pretty good match and we can report on it.
Yeah. What do your Article 9 funds try to achieve, and how do you monitor the success
First
of
of
your
all,
funds?
I would like to start with the client. Yeah, I think first of all you have really to find out by asking your client what is his expectation, yeah, to invest in a product. And I think here thematic investing offers the nice aspect that people maybe can combine investing with a certain passion or belief in a certain theme. Yeah, I think this is a very important starting point. What they want to drive forward, yeah, in their life. What kind of impact beside returns they want to have. Yeah, especially with the young generation. I just talked with a colleague of mine how the young generation has changed. Yeah, the kind of status symbols. I'm very sorry, I'm 50 plus. Yeah, and what usually was important for us when we were in our 20s, yeah, is very different to the what is important for the generation now being in their 20s. Yeah, I know the guys at that time, they wanted to have the biggest car with the most horsepower. Yeah, now, yeah, the young generation, they give a shit. Yeah,
well, they still want to have the fastest,
having the most fancy car. They're very super pragmatic. They want to get with public transportation, with Uber, whatever, from A to B. Yeah, they don't pay a lot of attention for luxury watches. Yeah, they say, I have my iPhone. Yeah, so I think this is very important. You have really first to identify what is the belief, what is the really expectation of investor. Yeah, for example, when they have the opportunity to say, okay, if I want to drive forward the energy transition, I think now a very topical topic. Yeah. But we have seen what is happening now in Russia-Ukraine crisis, and also the fact that Putin is more and more unwilling to deliver gas and oil. Yeah, and everybody has realized we have to get rid of it ASAP. Yeah, so I can say we manage an energy transition fund, and in terms of climate related topics, we are the second biggest provider of climate-related solutions after BlackRock, and you know how big they are, so it's really something that is relevant. Or you can invest in something what is topical like food, smart food, yeah? I think this is very important. Of course, in terms of benchmarking, which you also mentioned, it's also relative, because seed benchmarks, if you take the MSCI World, yeah, practice example. I think everybody who was standing for high growth thematic investing was the hero up to end of last year. Yeah. So, for example, smart food, we struggled. Yeah, and we always had to describe, you have not enough tech in it. Yeah, but it's a little bit more value theme. Now we are the heroes. Yeah, because agriculture is more a value play. So I think it's it's a combination of different factors. The investor have to ask himself how I want to invest.
Okay, please, Aanand, keep your answer short. I also want to get
definitely. So I'll say
from the audience.
Proof is in the pudding, right? I mean, if I were to come to you and say, oh, here's a fund, it could potentially lose 10%, but it scores really well on an ESG front, then people are not going to be looking at it. So for us, performance is important, but at the same time, how you provide that performance. It's easy to kind of camouflage FANGs into every basket and say, fine, it outperforms MSCI World, right? But that's not the point. For us, the bottom line is, what is it that I'm giving you or are my investors that they do not already own? So in terms of overlap, when you look at it, our thematic funds on average have less than 5% overlap with traditional benchmarks. So 95% in weightage terms is unique. And with that unique portfolio, are we able to give you some amount of long-term outperformance, targeting a specific theme with, of course, the ESG characteristics coming in, through active engagement, through screens, through actually theme-specific, I would say, selection filters as well. So that ultimately is what boils down to for us. Performance, but without compromising your philosophical beliefs when it comes to ESG, SDGs, and all that. I do agree with Richard that SDGs were not necessarily framed from an investment standpoint. So it's more of a natural consequence for us rather than an objective to say, I want to adhere to the SDG principles. But if we do it right way, in our view, you would end up with some sort of alignment with SDGs, particularly with sustainable focused themes. So performance, ESG, and what you actually get in the basket. So looking under the bonnet becomes very important. So you don't want tech in every basket, which is driving the outperformance. So the uniqueness of the basket becomes important as well.
Excellent. Thank you. Hopefully there are some burning questions one of us can answer. Please.
My name is Oksana. What's happening between Russia and Ukraine is not a crisis. It is a Russia-Ukrainian war where Russia is unjustifiably invaded. So, talking about ESG, you represent 5 different companies. Have you stopped operation in Russia? Because nowadays, supporting any business in Russia is supporting terrorist state, which translates into a bomb all over Ukraine. So I'm just curious, since the active phase of the 8-year war, have you stopped operations in the terrorist state?
I can start. I think Russia, of course, is an entity more focused on emerging market funds, no matter if it's equity, fixed income. We took the decision in November 2020 for fixed income funds that Russia is not investable. So it was far before the Russian invaded Ukraine, right? Because they were not complying with our good governance principles. So yes, ESG has the power. I'm not saying that ESG can foresee such events, but I think ESG has the power to protect from these kind of risks which might occur, which perhaps the market does not always see before. But in our case, if you take the right measures and if you look at the right statistics, I think you can kind of foresee what that these kind of countries we do not want to have, we do not tolerate in our portfolios.
But it's an important point that you had to make the decision, or your
Yes.
firm had to make the decision. I mean, you could pick ES or G. There is no way you should have a Russian investment in an ESG claiming to do anything to do with ESG fund, let alone a sustainable fund. And yet 16% of funds that claim to be ESG had Russian exposure. Why? Because they rely on MSCI, and MSCI in their wisdom thought that Russia was investable. I mean, what a joke. So the answer is we didn't have any exposure, so we had nothing to shut down or to disinvest from.
Yeah, but Russia is not particularly known for high-level tech companies. Yeah.
They had Yandex and MLW, and Yandex was a company that we have invested in the past,
Yeah.
but then we just found that it was uninvestable because Putin was thinking about capping foreign investment at 30%. And you've got to read the fine print because they had a $1.25 billion convert where if your stock's suspended, you have to pay it back in dollars within 5 days. Funnily enough, they were going to go bankrupt.
Let's stop here. So 2 institutions got direct feedback. Some more questions?
I can answer yours separately if you want here.
I have one more, and please answer in one word. Where do you see, no, let's take a 12-month view. In which thematic field with a 12-month investment horizon do you see the strongest client appetite? So over the next 12 months, where will you see the strongest client appetite, i.e. asset growth?
I say smart food.
Smart
From
food.
field to fork.
Clean energy to become self-sufficient.
Energy efficiency, I would say.
Automation.
We leave it here. Thank you very much to each panelist. Thank you very much that you preferred that discussion over the great weather. So enjoy the rest of the conference. Thanks very much.
Thank you very much.
Thank you.
Thank you.